Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Tuesday, 20th of June, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We're going to go for our usual regular run through in here today. Obviously, no webinar yesterday because of the closure of the markets being closed. So we're going to run through. I do what I like to call the bigger picture view, the shape of the week. I know we're day trading at trade day. I fully am aware of that. But no matter what time horizon you're trading on, I think it's useful to have a look at the shape of the week. What's coming up in the week? Where are the volatility points? If there's a lot of volatility expected in the second half of the week, there's probably going to be less volatility in the first half of the week. If we've got a lot of expectation of events in the second half of the week, then it probably means the first part of the week is maybe going to be more of a range, non-trending consolidation theme as opposed to a trending theme. So just bear all those things in mind. That's why I take a look at this shape of the week. So I do need to, it's going to be a bit of a pain because I'm going to have to go into the trading room in here. So let me see if I can go in here without causing too many issues, because I'm going to overhear my own voice in here. Oh, sorry. Eventually in here, I'll get there. So go to the canvas, but I'm going to have to hop into the trading room to go and get these stuff out. So we will hear the reverb of my own voice coming through, but I'm trying to get these as quickly as going. So let's just take the short version in here. There we go. I've got that. So there we go. The Macro Matters is obviously still available. You can go and get that at tradeday.com as well. So you can go and access the in here trading advice, but it's also posted in the members area in here and the Macro Matters. So do take a look at that, the weekly Macro Matters in here. So I will share that into the chat. I'll open it up as well, actually. In here, so you can go get that. That's also posted. I've been putting into the forums as well. Do take time to read it if you get a chance, guys. It's just a bigger picture, what we've had and what we've got coming up, but much more in depth of the recap on the week, what we've got coming up, a bit of technicals in there as well, but mostly on the macro fundamental side. Here's the précis, the summary in the weekly recap and outlook that I also post into the trading room. So despite hawkish tones from the Fed and ECB, this was last week, stock indices went higher. Fed skipped a rate hike, but it was definitely a hawkish hold. They're more hawkish than the market expected, ruling out rate cuts before the end of the year, looking for two more hikes now, maybe by the end of the year. ECB also hiked and said there will be more to come. But we are seeing inflation falling in China. Eurozone inflation has dropped in here, and disinflation may be starting to come through as a part of the aggressive interest rate hikes. And there's some more stuff on that I want to talk about as we go through today. Major US indices were significantly higher last week. We'd already entered bull market territory. The S&P with the S&P 500 built on that. Last week, the DAX, the German index, hit another new record high. The Japanese benchmark, the Nikkei 225, hit another new multi-decade high, levels not seen since the 1990s. Bond markets were fairly subdued, more sideways, although European bonds did go to higher yields with that more hawkish tone from the ECB. The dollar index sold off in here, and that's partly because the ECB were more hawkish than the Fed. So the euro went up against the dollar was down, and then we did see gold dip and rebound. Oil stays very range bound. Obviously, yesterday I'm highlighting in here was the US holiday markets were fairly subdued. We have had a slight risk off mode in European and Asian sessions to kick off the week so far. The big focus comes later in the week. So we have Jerome Powell testifying to Congress in here on Wednesday and Thursday, to the House and then the Senate Wednesday and Thursday. Sometimes we get something a little bit unusual coming from Powell. Not usually, usually sticks to the remit in here. There is a Q&A session, so sometimes he goes a little bit off-piste, but generally he sticks to what he said. And remember, he only spoke last week, right? So I'm not expecting too much from that, but that's kind of the big focus on the US central banking side this week. We also have various Fed speakers. We also get interest rate decisions from both the SNB, the Swiss National Bank, where a rate hike is expected, but for them to potentially signal an end to rate hikes. But from the BOE, the Bank of England, we're expecting a rate hike on Thursday and them to indicate further hikes to come. The main data points in the week, we do get UK CPI. Nothing really big from the US really this week. UK CPI we get on Wednesday ahead of the Bank of England decision. And then we get global flash PMI data from S&P Global. That flash PMI, remember the precursor data, the early data, the data for June. Okay, so we're getting June data in June in here. The global flash PMI data coming through from S&P Global on Friday. So that's a run through on the shape of the week. So more loaded towards the second half of the week. Obviously, yesterday was a holiday. Wednesday, Thursday, Powell speaking. Today could easily be quite quiet day today in here, guys. There has been a little bit of activity. I'm just going to look back before I look forward in here. So overnight in here, two things I'm just going to focus on in here. Actually, there's three things. We had the PBOC overnight. That's the People's Bank of China. They cut rates in here by 0.10, but there were hopes that they would be more aggressive on that. So I'll talk about that. There's a load of articles on that. I'm not going to dwell on it, but I'm going to talk a bit about that. The RBA meeting minutes in here showed that they were fairly split, okay, on the last rate hike that we got 3 weeks ago. Again, a couple of articles on that. We'll talk about that. They were fairly split, but looks like there's more rate hikes coming, okay? And then the other data we had this morning of kind of any kind of note was German PPI, okay? Producer price index. Now, PPI nowhere near as important as CPI, but it does have a potential follow-through into CPI. That German PPI data in here, much below expectations in here. So, and as at 2-year lows, PPI falling to 2-year lows. So a significant slowdown in German producer price index. Remember, that's factory gate, industrial prices, okay? So it does has a potentially follow-through impact into CPI data. Looking ahead today, I will run through some articles on all that stuff that I've spoken about on there, PPI, the PBOC, and the RBA, okay? But let's go and take a look at what we've got coming up today. Bullard is speaking in here. Now, where are we? Current time, it says current time 6:30. So Bullard already spoken. We're at 7:30 East. This is the Eastern time, right? 7:30 Eastern. So I think Bullard maybe already spoken. Seems very early though, right? I don't know why. What's he doing speaking at what they're doing speaking at 6:30? I don't know. I don't know. Maybe he's speaking abroad. Yeah, maybe he's in Europe. But it seems very early to be speaking. And then going through today, we've got a couple of ECB speakers. Housing starts, building permits, rarely moves market. I mean, they've got building permits. That's why you have to distrust these calendars sometimes. They've got 3 bulls. They've got this as a high tier, building permits. No, just not, kind of stuff. It's not going to move the market that much. Williams speaking later today, 11:45. Keeping an eye out for Williams speaking then. And that's most of what we got today. So it's a fairly quiet day apart from the Fed speakers. Let's just run through some of these things in this. We did get ECB Hawks speaking and Dove speaking. Lane is more of a Dove. We also had Schnabel. So they kind of cancelled each other out a little bit yesterday. And you can just see in here, Lane in here, much more of a Dove and was dovish. And Schnabel in here as a hawk and was fairly hawkish. That German PPI data I spoke about, slowest pace in over 2 years. So we're seeing everywhere we are seeing continued contractions in various pieces of inflation data. The problem is that it's sticky in other places. The CPI data is fairly sticky, and then also the labour market stays really strong. Here's that stuff on the RBA. RBA frets over inflation, finely balanced rate call, but I'm still looking for potentially more rate hikes to come since the last one, and there's the minutes on that. 5 things to start your day. So this was a kind of a positive. We've had kind of mixed out of China overnight. Positives coming from Blinken's speech, from both sides in here saying it went well. However, we have seen the PBOC cut rates by less than anticipated. So that was a kind of slight negative. And also Alibaba shares falling in Hong Kong. A 6-way restructuring was announced. UBS fines, we don't really care. And markets slightly lower going into this morning. Just going to run through a few of these articles there. They're non-US, most of this stuff in here. So stocks are down in here, but they're stocks in the US down on some of this stuff that we're seeing on the overnight, particularly with the stuff we have coming out of China. So Powell reports to Congress on Wednesday, rate cut uncertainty, bulls in for a rude awakening. But I'll get to the some of the equities back under pressure amidst China concerns. It's mostly these China concerns in it. So like overnight in here, shares in Japan, China, Korea were lower. Australia, because that was slightly more dovish tone from the RBA than we anticipated. The Australian dollar sold off and Australian stocks rose, but Asian stocks mostly lower. Worries mount at China's post-pandemic malaise. We've been talking about this a lot, right? We're seeing disinflation, deflation, falling prices in China. Okay, the recovery is stalling in here and not looking positive. The data all out of China is not positive. They did cut rates in here, but only by 0.10. The market was expecting more. We've had various different rate cuts. They cut the 5-year rate, but the Chinese bank disappoint with modest cut to 5-year rate, but only 10 basis points. Economists expecting more support and more support for housing as well in here. Okay, the housing market in China is struggling in here at the moment. China's delayed stimulus. So there's also not only the monetary policy stimulus, we're expecting other policy changes. But look, state council says support measures are being discussed. They've been being discussed for weeks and weeks in here now. We've been expecting something out of China. It's not coming through. China's sluggish economic rebound seeps into plastics market. All of this on China in here from overnight. Oil swings near 76 as traders digest China's stimulus plans. And then China cuts lending benchmarks to revive slowing demand. But in here, that's Powell. Where's the other one in here? Asia shares fall as China's modest rate cut disappoints in here. So all of this, relatively more negative in here out of China. Still seeking decisive stimulus in China. Yeah, oil as well. Oil was dipping this morning. Was rebounding since then. But oil mixed on China rate cuts, growth outlook. And what else have I got in here for you? And then just looking ahead to the Bank of England, still the Bank of England. Bank of England's like, inflation's super hot still. It's hardly dropped in here. We've still got inflation running at like something like 8% or something. 2-year fixed rate mortgages went above 6% in the UK in here. So real concerns in here with the difficult position that the UK is in, with inflation still running super hot. And then looking into it, look, Powell faces Tracy Carver explaining rate pools in Congress. The Fed chief's last tested in March before bank failures. Lawmakers expect to press him on further hikes and regulation. So real concerns of obviously with inflation still high, why are they going on pause? And he's going to be asked about that. So you see in here, the Hang Seng was down. The market was disappointed regarding China in here. European bourses in here. European exchanges lower this morning as well. The DAX down about 0.5%. The French CAC down 0.2. The FTSE pretty much unchanged. And looking into the US indices, we're about 1/3% down in here overnight. I haven't been closed yesterday, but dipped slightly lower yesterday as well. Where's the update on here? In here, yeah, about 1/3% lower. So all a little bit concerning. So some questions coming in. With China's rate cut, would the effect on price of China's made goods fall in here? Not necessarily. No, I mean, what the hope is, there isn't a hope in here, Jack, to an extent that we're going to get China goods, the export of China goods with their deflationary pressures, that we'll actually see, them exporting disinflation, not deflation, but disinflation. So we should see maybe, Chinese made goods prices falling, and then that would be a potential positive, right? Nothing to do with really the rate cut. It's just the fact that Chinese, products are falling in price, and that's just the way it is because, the economy is slowing. So, good prices are being cut because of that, right? So having spiked high with the rest of the world, they're coming down a lot faster, and that could be exported. We're not really seeing it yet, though, and the strength of demand means that when they export globally, global prices are still staying high. And until I think the labour markets the labour markets are still really, really tight, until the labour markets, loosen up a little bit, I think we're going to stay into this position of inflation being a little bit sticky and entrenched. Effectively, labour markets are tight, meaning, it's easy to get a job, right? If people feel that they can walk out of one job into another job, they're going to just keep spending, right? And it's when there's fear of losing your job, or fear that if you lose your job, you're not going to get another one easy. If you know you can walk from one job to another, then people will continue to maybe go into debt and to run up credit cards, even though prices are still high and inflation is still a problem. that people feel that they can move jobs, they can get an increase in salary, and they'll continue to spend. It's what really stops people spending is when they think there's no money. It's not when because prices are going up, and it will have an effect, right? So interest rate hikes do have an effect because mortgage rates go up. But if particularly in the US, when people are locking in for multiple decades of their mortgages, then it's not really having an impact. In the UK, there's usually shorter term mortgages get rolled over, so mortgage rates still go up. But obviously, if you move house, then obviously in the US you're remortgaging maybe at higher levels. But in the UK, we have like 2 year, 5 year. People mostly lock in for 2 years, 5 years. So as they roll through, mortgage rates are, mortgages are going. People are finding that they're spending. Their mortgage payments might go up like double or triple, quite easily as they go to remortgage. But at the moment, I think whilst the job markets stay fairly tight, and they are in the major global economies, in Europe, in the US, in Asia, the job markets are staying tight. And whilst they stay tight, whilst people feel that they can easily get a job, right, they're going to continue to spend. So I think inflationary pressures won't really come down until we see that happen. That's my personal view in here. But you might get a little bit of exported disinflation coming out of China. So that could help slow the global economy. But why is China slowing down so much? It feels like there's why are they cutting prices? Because the demand for goods is slowing down. The 18 months of rate hikes around the whole planet is having a negative effect on the factory of the world. And so maybe that's telling us, as I said previously, right, Germany went into recession. We was confirmed 3 weeks ago. The EU, and then, remember, they've gone into recession back in Q1 of this year, the first quarter of this year, likely still in recession now. So Germany's in recession. The EU as a whole has gone into recession. I saw yesterday that last week New Zealand announced that they'd gone into recession. Their data showed that they'd gone in recession in the first quarter of this year. So global economies, recession, remember New Zealand very much tied to the Chinese economy. Yeah, be interesting to see how the Australian data comes through. Is Australia near to dropping into recession? Again, reliant on the Chinese economy. Maybe we're going to get some of this recessionary pressures kind of being exported out from China. Right. There's nothing really more to add on the CME tool in here. It's been very static in here since last week. So 75% has been fairly static. And then going into the year end, still expecting rates to be where up and that 25 up just 25. So they're looking for 25 up in July and then staying up at those kind of levels going through year end, even though the Fed tells us 2 rate hikes. And then on the market side in here, we have had a dip lower in here. The last few sessions we dipped lower. There's the NASDAQ dipped lower Friday and then a little bit lower yesterday and then dipping and rebounding. But look, we're still kind of caught within the range from back on last Thursday's strong rally. And even though we've drifted lower in here, we're starting to remember. So you have got like a little double top pattern up here, but you've already met the objective. This is on the 15-minute chart. You've already met the objective for the double top. And you see here's Thursday's strong rally. We're still way above support in here from Thursday's strong rally, right? So, and starting to rebound. I think we could easily see it turn back higher in here today. So you've got this like little internal trend line running across here. If we move back above like 15,255 on the NASDAQ, it looks more positive. And similarly on the S&P, it's kind of more of a drift lower in here more than anything else. We did get a little negative candlestick in here back on Friday, but it's kind of drifted through the session in here. And we're already rebounding again in here. Here's Thursday's impulsive move. Again, arguably like a topping pattern up here, but you would argue also kind of met the objective. Again, in here, we've got like this kind of internal trend line running across here. Back above there, back above 447, 48 in here looks more positive on the S&P. So those are my lines in the sand. Right, guys, I'm going to wrap it up there. We're 20 minutes in. I'm going to wish you all a great trading day. Are there any questions, any further questions? Thanks for the question, Jack, by the way. I hope that kind of answered it. I went off on a bit of a tangent, but any other questions? Nothing coming through. All right, guys, I'm going to wrap it all up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you with another bull versus bear webinar tomorrow.